The market opened by none other than Rana Kapoor. In many respects, the most sought-after banker at this earnings season, at least because of the fact that they were that one which came out with that reassuring set of numbers after the carnage that we've seen. Mr. Kapoor, so good having you at this very special ET Now BSE Day. Thanks so much for joining
me. Good morning, Neeraj.
Yeah, great having you. And on the back of some very fantastic reported Indian macro data as well.
Yes.
7.3%. And while a lot of economists would be skeptical about it because, we did a whole host of discussions yesterday which said that people said that, it's not showing on the ground, even if the reported numbers are showing like that. What is your own sense?
No, my sense is that, things are definitely improving, call them green shoots, call it accelerating momentum. You can see it because in a bank's balance sheet, which is a basket of the economy, you can see that the wheels are moving, I think it's taken a while to lubricate the wheels, but definitely, you can see gear changes happening. But we're still somewhere between first and second gear in terms of the market opportunity.
Okay. A lot of people believe, the common refrain that I hear these days is that, yes, the economy will pick up. We do not know when it will pick up. So irrespective of what the GDP numbers are showing, the economy pickup is probably 2 quarters away. And it's been like this now for the last 4 quarters. What is your sense on when does the lubrication actually takes impact?
I think there are a couple of very significant events which are around the corner. I think this is a golden opportunity for the government, which has stabilized itself over the last 2 years in power, to make some stratospheric, changes. So we need what I call orbit-changing interventions, in this budget, whether it's in farm infrastructure, whether it's in rural asset creation, stimulating financial savings, direct tax rationalization, for instance. So there are a lot of headline points which require not just tweaking, but strategic decision making and then communicating that with confidence and conviction. So that is what the private sector is waiting for, and it is the private sector right now which is lukewarm.
Okay, and probably could remain that way if people are to be believed. Maybe the spending will have to continue in calendar year 16 from the government as well. But the thing, Mr. Kapoor, is that as has been the case in the past, now a lot of actions are being taken outside the purview of the budget. Yesterday we've had this MIP on steel. It helps the beleaguered sector. And in many ways, our commentary on the channel yesterday was that it goes out and helps, amongst other things, banks in a big way because of the exposure that they have. What are your thoughts on this very important move that has been taken?
I think this is a very significant move which could have happened much earlier. But the fact is that better late than never, right? Two is that, we know that China has been dumping and Japanese and Korean steel is about 30% cheaper in terms of Indian shores. So the cost structures need to be somewhere rationalized so that Indian steel producers who are fairly aggrieved and fairly much in trouble, at least they have a soft landing. So I think this is a very important development which should help to cushion banks' exposure to this extremely sensitive sector.
Now, my thing is, and forgive me for trying to get into specifics if you will, but you don't have too much of an issue. Your exposure is 3% if I'm not wrong.
3.2%.
Yeah, most of your exposures as well are in A-rated companies or above as well. But for banks which have large exposures to this beleaguered sector, how soon can an impact of then such a move have? I mean, does it start showing immediately or does it take a while?
You see, there is definitely going to be a lag effect. Because if you see the kind of exposures that banks have to the steel sector, they're very, very large exposures. The good news and the bad news is that the replacement cost today of building new plants and getting all the supply chain linkages established, even getting land allocated, with the exchange rate where it is at $68 or so, the replacement cost of some of these plants is humongous. So I believe that if there is intrinsic value in these assets, which there is, and if they are restructured under 5x25 properly, such that there is economic value preservation, my sense is that the banks and naturally the producers, the promoters of these companies, will have a softer landing. I think it was the belief, the credit risk embedded in steel exposure, which was not being, perceived to be bankable. So I think with this move, the bankability of this exposure really improves, and therefore the likelihood of more successful 5x25s.
Sure, but you believe that this move in isolation, the way it has been taken yesterday,
Yeah.
can actually lead to a healthier number reporting immediately? I mean, April onwards for the Jan to March quarter, you think such impact could come in?
I think the remaining 1.5 months of this quarter are mission critical for some of these exposures, not all of them, because a couple of them are still like okay because they had very strong corporate balance sheets, you know.
Yes.
The ones in the middle are the ones, you know, which are in a bit of trouble. And I think if the banks, the lead banks, can restructure them with proper bona fides, with proper preservation of economic value, I repeat the point, because a good restructuring preserves value, right? All it does is it recasts cash flows into the longer tenor, but the value of the assets is there very much embedded, you know. So I think if we really on a war footing complete some of these 5x25s, refinancings, I have a reason to believe that overall the banking sector will have a soft landing.
That's reassuring to hear, to say the least, Mr. Kapoor. Now, sorry.
There's some recapitalization which is also required, which I'm sure is going to be a headline item in this forthcoming budget, as are a few other related issues, you know.
Okay, and we'll watch out for that for sure. My research team is listening to this actively. Now, you know, a couple of other things related to Yes Bank as well. You know, it was reassuring to see your numbers, quite frankly, from a sector perspective too. Now, your commentary, your reporting was very, very strong. If you would just enumerate, how do you feel sitting at right now? What does Rana Kapoor feel about the next 11 months for Yes Bank?
No, I feel very great first and foremost that fairly recently our bank completed 10 years of listing. I remember vividly.
2005.
Yeah, 2005, July 12th.
Yes.
You know, we got listed at the same BSE well.
Yes.
Until very recently, when our stock touched about 910, we were a 20 bagger.
Yeah.
Because our IPO was done at 45 rupees. So I'm told by the experts that this was the best performing IPO in the last 10 years. So naturally, the leadership team at Yes Bank would want to maintain, you know, its ranking at least in the top 1 to 3, and therefore our effort has been in this very demanding cycle. Because if you see our life cycle of 11 years and 1 quarter, which is 45 quarters since we started business in August, September 2004. You know, we have seen the global crisis, you know, which started, as you know, in March, April 2008 with Bear Stearns. We have seen the compounding of the Eurozone crisis, and, you know, Eurozone is still not out of the woods, as we all know. Then India's own, let's say, economic precipitation, in a way, started in October of 2011, when we saw the GDP fall, you know, below 6%. To me, that was a very big red flag in 2011. Now that, you know, there is, at least we are printing north of 7%. I was very happy to see the numbers yesterday. And naturally also the revisions for the June and September quarter. And the outlook, which is improved to 7.6, is very, very reassuring. But India is underperforming at 7.6. With our potential, with our denominator of GDP being just about $2 trillion, we should be doing 8.5%, 9%.
Right, but when does it start showing on the ground, if you will? I mean, the people on the ground don't feel it's 7.6.
You see, it's a very relevant question. What do we need? You know, we need growth impulses, right? Growth impulses will come from 3 or 4 things, right? First and foremost, we need to get the financial savings in our economy really catalyzed. From 2008, our overall savings propensity in the country has fallen from 37% to about 30-odd %.
Right.
Number 2, the recapitalization of banks, which also has to be accompanied by very specific de-stressing actions, as evidenced in steel sector to some extent yesterday. I think rural asset creation, because the rural economy needs to be, you know, looked after a lot more through whatever formats, revise NREGA, or for that matter, more infrastructure creation. So I think there are, and then of course the core infrastructure.
Right.
Because I think the core infrastructure, as we are seeing in renewable energy, you know, which is the sunrise sector, we are seeing the de-risking and de-stressing in the road sector, and a very bankable hybrid annuity model has now surfaced. We are seeing improvements in logistics and transportation. So if you see and smart cities itself is going to be like a very big, you know, catalyst in future. So my sense is that, you know, we are just about 6 to 9 months away, and the busy season of the new year, which starts in October, should show, you know, tangible improvement in the economy. This is my judgment call.
For Yes Bank as well, can the improvement be further?
I would like to believe that improvement in our bank is well underway, because we've been architecting and making sure that our risk, structure, our risk culture in the bank is in a way enhanced in these demanding times. And therefore, the report card over the last few quarters and improved disclosures have restored the confidence, which was somewhere being questioned on and off. But I think December results do prove that we are managing a risk reasonably well.
Yes.
I'm not saying that it's all over, because we still need to monitor next 1 or 2 quarters. But certainly I have reason to believe, looking at the MIS systems, which I do almost every day, that we are in very good shape.
Great. You think you can emulate? It might be a difficult one to say about a quarter-on-quarter basis, but safely over the next 4 quarters, you think this performance of December can be emulated on all various counts, be it the NIMs, be it the kind of CASA asset quality that you've shown?
Neeraj, definitely, we have full visibility for this last quarter, March 2016, because we need to get this year out of the way. As we look into 16-17, in my assessment, 16-17 will be a better year.
Wow.
The de-risking process is very advanced. Number 2, we are also seeing gains in market share. We are seeing some inroads in mind share, especially in sunrise sectors, which is where the bank is orchestrated our knowledge banking strategy over the last 10 years, and now we are getting the scale, we're getting the momentum, and we're getting new relationship breakthroughs. Plus our retail investment, which we have been making very consciously over the last 4-5 years, that's also reaching an inflection point. The 750 branches, almost 14,000 people, of which almost 80% are deployed in various retail and SME businesses. We also want to be a very good SME bank. And with the startup ethos, with entrepreneurship, with emphasis on micro SMEs, Mudra Yojanas, Mudra Bank, the overall ecosystem for MSMEs is also really garnering fantastic momentum. So I think our bank should be a very good MSME bank, and then steadily with the development of the Yes brand, because the Yes brand also, and we figured in your ET corporate brands quite prominently recently, and I have reason to believe the retail consumer financing should also pick up. It's reflected to a very large extent in the overall granularity and diversity of our retail liabilities. So CASA plus granular retail touched 53.5% as of December, and we are very well on our way to getting to a 40% plus CASA by 2020, and definitely minimum 70 to possibly even 75% retail liability composition. So the right hand side is showing the retail results, and the left hand side is a little bit of a high road, because asset acquisitions have to be done very steadily, such that we can absorb the risk, and 2, we can process the risk and build differentiation in quality assurance, in turnaround time, and therefore we are investing in a very big way in setting up a centralized operation and excellence center in Chennai, a very big center for our centralized processing.
Okay, so all things in place for the growth going ahead. Just one last question that I have, something that is not known about the fundraising. Now, that the $1 billion mark is known. When do you likely believe you will do it, and what will the composition be? Because you also have the option of the GDR in UK pounds as well. So how will the split be, if you can give me these 2 details?
You see, the couple of things that I wanted to highlight is that, our bank did get into the Nifty last year.
Yes.
We hope to get inducted in the MSCI sometime later this month, if all goes well. The fact is that there is fungibility, which the government has announced, which was pending for a very long time between FDI and FII. So we have headroom. Foreign FII ownership is around 40-odd%. So we have now headroom to go all the way up to 74%. So 34% headroom. So we have a lot of flexibility in terms of capital raising, whether it's a QIP and or a GDR combination. The fact is that we did raise 2,800 crores very recently in the last 30-odd days as Basel III compliant Tier 2 capital from EPFO and LIC, and therefore the cap add of the bank is fairly comfortable, is north of 16%.
Okay.
So as our bank's re-rating happens and we get to certain benchmark values with our peer group banks, we will consider capital raising more towards the second half of the new fiscal year, which is, not very far away. Not at this pricing.
Well, must say though, as of now, you're also a lot more expensive than some of the other larger private sector banks as well. So, yeah, but I take your point. Just a statistic that I thought before we wrap up this interview, you mentioned about being a 20 bagger from the issue price. Even if people bought your stock at listing price of 65, if I'm not wrong,
which is correct.
You would still be a 10 bagger in 10 years, which is no mean feat for any bank of your size. So it's been great going, and we just hope that continues in the years ahead. Thank you so much, Mr. Kapoor, for joining in today on ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNow Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.